Welcome back to Your Average Investor, everybody. We're going to do a quick recap on the week that we just had and then talk about some upcoming plays for the next week in our next video, which will be out tomorrow. Now, if you haven't already, please subscribe to the channel. It does a lot to help support this channel so we can get this thing monetized and get some more giveaways going on. First things first, let's take a look at the S&P 500. It looked like we were going to move into a little bit of a sell-off territory this week until end of day Friday. You'll notice the Friday minute chart is just absurd. There is a nice little slow and steady sell-off all day, a little bit of a recovery towards the end, and then the last 10-15 minutes or so, the S&P 500 marched up nearly a full 1% just in those last few minutes, green bar after green bar after green bar, all the way into close. The remarkable thing is there was no news. There was no reason for this. It just happened. So instead of having a red day, we had a massive green day Friday at market close on some pretty significant volume as well. If you look at this volume at the end of the day was absolutely phenomenal. So a very strong indication that we're moving right back up to all-time highs and continuing on from there. Now, in addition to that, we had some really interesting movers this week. Of note were Abercrombie and Fitch, which was up on earnings a just massive amount. It went from $150 to nearly $200 per share before selling off here to $172. In addition to that, Gap, GPS, had a massive jump on earnings as well, $22 to $28 per share, up nearly 30% by the end of the day. On the other side of the field, we had CRM, which had a massive dip of about 25% on earnings. Big drop. It looked like there's going to be some weakness in tech. We talked about this in the CRM video too. I said if it gets down to about that 112 or 115 area, that it might be time to start looking at a long position. And if you'll check this out, dipped down to 112 at low and then came right back up and moved on forward up to $134. So if you bought the dip here, congratulations, you'd have made a nice little chunk of change so far. Right along with that was Dell. Dell also fell on earnings about, as you can see here, minus 18% by market close. At the absolute lowest point of the day, it was down about 22 or 23%. So interesting to see some potential cracks in the tech scene as different companies are reporting. And of course, Nvidia still remains in a fairly strong position, but has started to show a little bit of a sign of a sell-off. And this, I wouldn't be surprised to see this continue on down back to around where it jumped after earnings, or potentially even all the way down back to where it was before earnings, sub $1,000 a share. Nvidia should complete its stock split next Friday, I believe. There will be a 10-for-1 stock split, and that's when I think we'll see a decent sell-off happening in Nvidia. Of course, this is not investment advice. It is just my opinion only and for educational and entertainment purposes only. Now, other than that, there's no real big news that happened in the stock market this week, although maybe on a tangent side related was the conviction of President Donald Trump. And subsequently, if you look at the stock of DJT, his social media company, Truth Social, not a whole lot of downward movement there like maybe you would expect if he did get convicted and it was anything serious. So I was a little bit surprised by that. I thought there'd be a much larger move down on the news of his conviction. What is interesting to see is that it seems to be respecting some sort of little VWAP. If you take this right here, excluding this one bump here, this upper banded VWAP, you can see acts as a pretty good resistance point multiple times in a row. Now we're looking to see if we squeeze between these two to either pop above or below. My guess is this continues back down a little bit, maybe into the $40 range before marching on forward. We'll have to see what happens next week as this story continues to unfold. Other than that, the only other update is the challenge account. The challenge account continues to do quite well. These cash secured puts that we sold on Jumia have returned a healthy 69% profit. And that's assuming we could buy them back at the midpoint, which would be 17.5 or $18, which probably could at market open. I talked about wanting to exit this position if I could get out of it for $10 on the ask. I had a buy order in for $10. It never got filled, so we're sticking in this for at least a few more days and going to see if we can get out at $5 or $10 per contract and then move the cash into something else. As always, I'll be posting as soon as I make that trade, so if anyone wants to follow along for fun at their own discretion, they can do so as close as possible to when the trade is actually made. And as you can see, Jumia had just a really nice move up the last few days, came up right against this resistance zone, faltered for a little bit, and then moved right on back up, and you can see in after hours came right back up to that area again. So we'll see what happens Monday if it pops above. I'd be very curious to see if it pops above that resistance line and breaks out maybe up into this $8 range. If it does, certainly we'll be exiting the position because these will be worth almost nothing, and it won't be worth holding them for the next 20 plus days until they expire worthless. Positions that I'm looking at getting in instead right now are SoFi. I like that SoFi has been dipping a little bit below $7. I think that's going to give a good entry point. So I'm considering doing some SoFi shares with a little bit of a cash secured, or excuse me, a covered call to hedge against some downside. And what I would probably do is actually sell this call 7. So I wouldn't go too far out of the money. I'd stick right here, do the call 7, because that's going to give me significantly more downside protection, and that's what I'm looking for in this play right now. And it'd still give me an okay potential upside as well, where I'd get maybe $40 plus $10 in price appreciation, so $50 on a $690 position, right? That's how I'm looking at it. If I get in this at $690, I can get $50 out of that. That's a 7.2% gain in 30 days, and I'm real happy with that. In addition to that, it leaves me about $300 or $400 I could throw into another play. So what I might do with that other $400 is go into something. I was looking at Big Lots again. Big Lots is looking kind of interesting. Lots and lots of premium on these covered calls. So I could buy 100 shares of Big Lots for about $350, sell a call 3.5 for $45. Gives me some decent downside protection. And then again, if I get exercised, well, we'll just go, let's see, 355 divided by, or excuse me, wrong way. We got to go start by 50. 50 divided by 355, or it'd be 45 actually, wouldn't it? Let's start over one more time. 45 divided by 355. That'd be a nice 12.5% gain on that. So between that and the SoFi play, it'd be a phenomenal gain for the month. That's it for today. Hope you guys had a phenomenal week in the markets. I know that we did. It was a great week for us. Another play. Oh, by the way, I'll end on this. If you're liking dividends, this is one of my favorite dividend plays right now. And every time it dips down, I do my best to buy more. And I think it's at a really good spot down here at this $51 mark. You can see it just zoomed right up off of that. If it dips back down again, I'll be buying more. If it goes way below that, I'll be buying a heck of a lot more. Realty Income, the monthly dividend company, they've got, as far as I can tell, a very strong real estate portfolio with a large number of paying clients and a very small number of vacancies. They don't seem to be having issues with vacancies or anything like that. And I think there's a good shot that this becomes an excellent dividend company for the next 10 years or so. Thanks for watching, everybody. We'll catch you tomorrow.